Hello, greetings, and welcome to Dividend Blasters. This is our 39th video, and the topic today, invest in Visa. Dividend investors, you need to pay especially close attention to this one. Visa is a money machine. It's a cash machine. And if you're not invested, you need to be. Uh, Full disclosure, I am an investor. I have shares. I have several shares, and I could not be more pleased with the performance of the price as well as the dividend growth that I get from this investment. So I'm going to talk a little bit about its history, its business operations, its model. I'm going to go at a high level first to do a comparative analysis with some of its peers. And then I'm going to go a little deeper. I'm going to focus in on one of them, and I'm going to touch on some of the key metrics that we dividend investors look at. Let's press on. Disclaimer, I'm not your financial advisor. This is not financial advice. This is financial education. It reflects my own personal opinions, my research, and my experience as an investor for more than 30 years. So before you make any investment decisions, do your own research, due diligence, and consult a financial advisor. Next one. I'd kindly ask you to give us a like here at Dividend Blasters and subscribe to our channel and share this video with a friend or a family member. All right, let's move on. So what is Visa? A lot of people think Visa, well, that's that credit card. Well, yes, but not completely. It's a payments technology company that operates worldwide. Its network is known as VisaNet. It's a transaction processing network that enables authorization, clearing, and settlement of payment transactions. This is really where they operate. And to compare it to a company that issues credit cards is not really correct. You need to compare it to another company that has a payments technology network, like MasterCard, for instance. So, anyway, and I'm going to clear that up a little bit more, but let me just talk a little bit more about their products. They do offer credit and debit cards and prepaid card products. They offer tap to pay, tokenization, and click to pay cards. They also offer something called Visa Direct. It's a real time payments network. They also offer Visa B2B Connect. It's a multilateral business to business cross border payments network. They offer Visa Treasury as a service. It's a cross border consumer payments business. They offer Visa DPS, and it provides a wide range of value added services, including fraud mitigation, dispute management, data analytics, campaign management, and a suite of digital solutions and contact center services. So you kind of get the picture that this is a big enterprise, not a credit card company. It's massive, it's an enterprise. All right. They also offer CyberSource. It's a payment management platform. They offer risk and identity solutions such as Visa Advanced Authorization, Visa Secure, Visa Advanced Identity Score, and Visa Consumer Authentication Service. They also offer Visa Consulting and Analytics. It's a payment consulting advisory services arm of Visa. They serve consumers, merchants, financial institutions, and government entities. Founded in 1958, headquartered in San Francisco, California. So, quick facts. As of 2020, there were 485 million open general purpose card accounts, and they've spanned four major networks: Visa, MasterCard, American Express, and Discover. Those are the four major competitors in the cards market, and over 214 million open private label accounts. In 2021, Visa had 50% or close to it of all credit cards in circulation in the United States. When combined, it's Visa and MasterCard. They dominated the market in 2021 with over 75% of spending by purchase volume. So you kind of get the picture. Visa's really number one, MasterCard's number two in size and magnitude. 2021 saw an increase in purchase volume compared to 2020 across all networks. Visa saw the biggest increase with over $400 billion. Here's the distinction I wanted to make. The top 10 card issuers in the US held nearly 88% of outstanding credit card balances in 2021. Now, the card issuers are the banks, the credit unions. They issue the cards, okay? But the networks are owned by Visa and MasterCard. Chase has the largest credit card market share of any issuer in 2021 when measured by outstanding balance and by purchase volume. So what you'll learn is that JP Morgan Chase is really the largest issuer of credit cards, of basically Visa and MasterCard. The second largest issuer is American Express. They're their own card. They issue their own card. A few more facts on the market. So a credit card network like VisaNet, they set their own terms for credit card transactions. They authorize them. They process them. The market in the US has primarily, and I already mentioned this, four major players: Visa, MasterCard, American Express, and Discover. Okay, they differ primarily in terms of global acceptance and perks, but they also buy market share. Again, Visa is the clear leader with more than $2 trillion in purchase volume in 2021. MasterCard is the second with over 1 trillion in purchase volume. American Express and Discover, they round out the top four with 892 billion and 182 billion. You can look at the charts at your leisure, but I just gave you the key nuggets. So a little bit more background on Visa. They're basically, as far as number of cards in circulation in the US, they're number one. They have almost 50%. It's 48%. Number two is MasterCard at 36%. There has been a little bit more growth in recent years by MasterCard against Visa, but it's been slow. All right, let's go a little deeper on Visa. They closed yesterday, Friday, June 9th, $223.56. Let me draw your attention, and I shaded a few of these items. Earnings per share, 8.58, more than sufficient to cover that forward dividend rate of $1.80. What you're going to notice is that yield, that forward dividend yield, is modest. It's less than 1%. It's 0.81%. Nothing to write home about that yield, but when we get to the CAGR, you're going to be impressed. And I got to say one other thing. That is not uncommon against their competitors, like MasterCard. They also have a modest yield, but a impressive CAGR around the dividend. All right, so let's take a look at the P&E. The P&E, I think, is a little bit high. It's 26. And compared to the Dow Jones, it's a little bit more, which is 22 and a half. Compared to the S&P 500, it's a little bit more than more, which is about 18.7. So I'd say relative to the market, Visa is a little pricey. All right. But you're going to see that MasterCard is even a little bit more pricey. But you need to actually look at it, not just how they compare to the market. You need to look at how they compare to their peers and competitors in their sector. All right, let's press on. Oh, and I do want to mention it's a big company, market cap nearly $460 billion. It's big and continuing to grow. Okay, price return since, and I did a max time horizon, it takes us back to 2008, so 15 years, over 1,321%. That's pretty good. Total return. Total return is the price return or the price appreciation plus dividends. That's going to bring us up to about 1,481%. That is really good. Same time horizon, 15 years back to March of 2008. Here's a quick summary of the dividends. And I do apologize that the screenshot is kind of floating over, but I wanted to get all the necessary data points in there. But what you're going to see is they get very high scores from Seeking Alpha, and that's where this information comes from on dividend safety, dividend growth, and dividend consistency. And the shaded metrics speak to that below. What they also speak to below is the dividend yield. And I mentioned it's modest, it's 0.8%. Seeking Alpha gives the yield an F because it's so low. But I tell you, that CAGR is phenomenal. That 5-year growth rate of the dividend is 17.2%. And they get an A plus, and they deserve every bit of that grade. Its dividend safety score is also an A plus. Their payout ratio is 21%. It's a very safe dividend. You typically don't like to see the payout ratio exceed 60%. They're well within that. And again, I'll get to this a little bit more. This company generates so much cash, they have no problem covering it. And I mentioned the PE, or the earnings per share, it's more than sufficient to cover that forward dividend rate. Dividend consistency, they give them an A minus. And I'm going to tell you, they will be an A plus in a few years. They get an A minus for dividend consistency because their dividend growth streak is 14 years. 14 consecutive years they've been increasing the dividend. In 11 years, they will be a dividend aristocrat. And they keep doing what they're doing, they're going to get there. Next one, dividend growth. And I alluded to this, and I've shaded the 5-year CAGR and the 10-year CAGR. 5-year CAGR is 17.2%. The 10-year CAGR, and CAGR is compounded annual growth rate of that dividend. For 10 years, it's 19%. Look at how they compare to the median score in their sector. Okay. They're being compared to their peers in their sector. So to MasterCard and American Express and Discover, um, they are more than double in both cases. Now, I want to say this, and I'm going to get to this because I'm going to talk a little bit about MasterCard. MasterCard's dividend yield is lower than Visa's. Their growth rate is comparable. So it's the others that are bringing the median down, and then there's some others that are lesser known. And you know what? When I'm actually just talking about really mostly these big four. There are some alternative payment technology capabilities out there, like PayPal, which is very well regarded, but it's much smaller. So I'm really not focusing in on them, but they're part of this metric. But I'm really not focusing on them. Also, I'm not really talking about Venmo and some of these other peer-to-peer type technologies. So you know what I'm talking about, and that's really going to be my focus here. I'm really focusing on the really big players here. All right, next one. Peers and competitors. Okay, Visa and MasterCard. Okay, and I did mention PayPal, but really and you can see they're much smaller. American Express is much smaller. It's about a quarter of the size. Discover is much, much smaller. And I'm looking at market cap. MasterCard is about 75% of the size of Visa. So they're really their only true uh, competitor in this payment technology market, if you will. So 467 billion versus 360 billion. Number of employees is about the same. All right, next one. Trading price. Now this is interesting, and I've shaded the last closing prices of yesterday, June 9th. Visa trades at a lower price, $225 per share. MasterCard, 371. So MasterCard is a more pricey investment. Take that as you will. But I'll tell you what, as a dividend investor, I'm someone who wants to get the most bang for my buck, and I want to have more shares versus less. So I'm looking at price. I'm also looking at dividend growth rate, and I'm looking at growth. When I say growth, I'm going to talk about things like revenue and earnings, and market share and things like that. Okay, next one. Total return. Now, I got to tell you, when you look at this, you're going to think, whoa, what the heck? So, total return, I already mentioned, is around 1,480% for Visa. And this is for the max time horizon going back 15 years. MasterCard, 8,300. You got to remember that MasterCard started out at a much smaller base than Visa. So there was a greater upside. So it doesn't mean they're 8 times better or they're growing 8 times as fast from the same starting point. No, they started at a much lesser starting point. Same thing with American Express. They're much smaller. So you need to take that into context. These are all impressive growth rates. MasterCard has an impressive total return, but I just want to put it into context against a much larger competitor like Visa. Here is a graduated look that isolates total return from 1 month to 10 years. And you know what? MasterCard has the better 10-year return, a little under 600%. Visa's is about 437. But again, MasterCard is much smaller. Uh, Now, take a look at year to date and 1 year return. Visa's winning. Visa does better. 9 months, they're about the same. 6 months, it's Visa. And then, you see MasterCard for the last 3 months. 1 month, it's Visa, and they've both been losing total return over the last 1 month because the market's been a little choppy to them both. And you know what? You can take a closer look at PayPal and American Express. I don't, I see, and I'll just say one thing about PayPal. They've been getting beat up a lot in the market. They're trading at much less in the 60s, $64, $68 a share. Uh, American Express is much less. It's in the, I want to say in the 120s or the 130s. Discover is much less. I have owned American Express. I have not owned PayPal or Discover, but you can take a closer look at those. And again, I'm focusing more closely on Visa and MasterCard. Next slide. Um, the ratings from Seeking Alpha are essentially the same. Wall Street is bullish on them both. They're bullish on all of them, you know? Seeking Alpha is bullish on them both. The quants are basically hold. And I think they're hold because they feel that, when I say they feel, the numbers are saying that the price is a little bit high against the earnings for both of them. All right, next one. Dividends, I mentioned that the yields are modest. So the forward yield is 0.8%. MasterCard's is lower, it's 0.61. The payout ratio is a little bit safer for MasterCard. It's about 20%. Visa's 21. So it's about the same. The CAGRs, I will say that the CAGR for 3 years is better for Visa. For the 5 year, it's about the same, tiny, tiny, tiny bit better than for MasterCard. The dividend growth streak, 14 years, it's Visa, 11 for MasterCard. They're both close. Okay. I mean, around and the dividend scorecard, it's kind of a toss up, but I will probably go with Visa because the yield is less modest. The payout ratio is a little bit better. The CAGR is about a toss up, but they have a better growth streak. So anyway, that's my story. I'm sticking to it. The grades by Seeking Alpha, no surprise, they both get Fs for yield, but they get A's and A pluses for everything else, both of them. So the dividend grades are really about the same, kind of a toss up. I'm partial to Visa. The valuation, I did speak about this at the beginning, the PE ratio, the forward PE ratio. It's more than the Dow Jones. It's more than the S&P 500, but for Visa, it is less than MasterCard's. So they're both a little pricey relative to the market, but Visa is better priced. The price to cash flow is better for Visa. That should tell you something, and we're going to get to cash flow and net cash flow from operations. That should kind of give you an indication. Maybe Visa has a better cash flow. We'll see. Aha, let's take a look at revenue growth. Revenue growth, they're about the same year over year, 15 versus 14.7. I would say that the 5 year compounded annual growth rate for revenue slightly better for MasterCard. Let's take a look at net income. Net income for 3 year CAGR, and I got it shaded, is better for Visa. So you can see that it's kind of a toss up around revenue and net income growth. Um, and again, and I've mentioned this before, when you look at these metrics, you can't just say, aha, Visa wins on this metric, so Visa's the better buy. No, it's more complicated. Usually, you gotta dig and you gotta look at these holistically before you make an informed decision. All right, next one, profitability. Well, I do like the net income margin. It's about 51% for Visa. You know what? MasterCard's is phenomenal. It's about 42%. Visa's is better. Cash from operations. Okay, so this is your net cash flow I was talking about. 19 billion for Visa. It's almost double Mastercard's. Mastercard's is impressive. It's 11 billion. Okay? Take a look at American Express. That's a much smaller company. Theirs is almost 17 billion. It's more than Mastercard's, but they're a much smaller company. It's not as much as Visa's though. Now, Visa, I think, has more product offerings. They're a little more diversified. So maybe you know, they gotta look at some of the diversification. I don't know. But you know what? Take a look at this. Net income per employee. Wow. And if you go back to the earlier slide, they both have approximately the same number of employees. It was like 26,000 versus 29,000 employees. But look at the net income per employee. Visa is about 596,000. MasterCard's 323,000. And the others are much smaller. Okay. So uh, those are the things that I like to look at. And I would say here on profitability, Visa's more profitable. Price performance, well, let's take a look. Last 3 months has been MasterCard. Last 6 months, it has been Visa. It's been a little bit more for 9 months, but year to date, it has been Visa. The last 1 year, more than double for Visa, 5% versus 2%. Now, when you start to look at a little bit further out along the longer time horizon, MasterCard has performed better on price return or price performance, and much more. But I do think that, and I'm going to say this, I look at the PE ratio, they're priced higher relative to the earnings. I think that both investments are a little high priced, but I think MasterCard is probably a little bit overpriced. Risk, they're both safe investments. Look at the betas. The 60-month is a little bit better for Visa, as is the 24-month, but they're both fine. Remember, beta is price volatility relative to the larger market or the S&P 500. Um, Visa's is considered a less volatile investment relative to that larger market. For the last 24 months, so has been MasterCard. For the last 60 months, it's been a little bit more price volatile. Income statement. Well, as I mentioned, Visa's a bigger company, so they have more revenue, about 31 billion versus 23 billion for MasterCard. Net income, much more, 15.8 billion versus 9.7 billion for MasterCard. Operating income, much more for Visa, 20.74 billion versus 13 billion for MasterCard. So income, I'm going to say it's Visa. They're just a bigger company. And you know what? This is to be expected. They have bigger market shares. I mentioned at the beginning, more cards in circulation, more purchase volume. Every time somebody uses that card, it's going to be generating fees uh, for them. They get paid, and they get paid a lot. So here we have total cash, 16.6 billion for Visa, more than, you know, 2.5 times as much as MasterCard's. Now they do have more debt, but look at the net debt. Okay. Remember, MasterCard's a smaller company, but they have twice as much debt, 8.26 billion versus 4 billion. Let's look at long-term debt. So Visa, being a bigger company, has more long-term debt, 20.6 billion versus Mastercard's 15.3 billion. Let's look at long-term debt versus total capital, that ratio. Visa's is a very manageable ratio of 35%. Mastercard's is more than double, 73%. That tells me that they have more debt relative to total capital than Visa. Something to think about. I prefer, when I invest in a company, to have more cash and less debt. Just saying. Cash flow, 19 billion for Visa, 11 billion for Mastercard. That is your net cash flow from operations. It is almost double for Visa. Next one. So, what are the key takeaways? Key takeaways are this. I'm going to take my time on these. These are the two largest payment processing networks in the world. They do not issue cards directly to the public, as does Discover and American Express do. Remember, their cards are issued by banks, credit unions, financial institutions. Okay? They issue their cards, credit cards and debit cards. In terms of purchase volume, Visa is the clear leader. They have more than $2 trillion in purchase volume as of the end of 2021. MasterCard is number two with 1 trillion. American Express and Discover are distant third and fourth. And really they're around 900 billion and 200 billion respectively. Then there's other new entrants that are alternative payment capabilities in the market, like PayPal and Venmo. I mentioned PayPal. They're really one of the sector competitors that Seeking Alpha provides information on. I didn't really go into Venmo because they're kind of different. That is probably a different video, but I'm mentioning them because they're a potential future threat to all of these competitors in the market, including Visa, but really not much of a threat today. In terms of credit card circulation in the United States, Visa has about 48%, MasterCard has about 36%, and then the others are further behind. So when we drill down a little deeper on some of the investment metrics, modest forward yields for both. Visa's is better than MasterCard's, but the CAGR is phenomenal. Okay, and remember I talked about the hurdle or the threshold that we like to see with the dividend yield and the dividend growth rate. We like to see more than 10%. Well, here you're basically at 18%. That to me is a winning combination. Safe payout ratio 21%. Wonderful dividend growth streak of 14 years. They keep it up for another 11 years. They're going to be a dividend aristocrat. The forward PE ratio is a little bit high. It's 27, more than the S&P 500 and the Dow Jones Industrial Average, but it's less than Mastercard's. And you got to look at how their peers are also doing. Slightly better revenue growth and net income growth for the 3-year time horizon. They are a bigger company, so their operating income is much bigger. It's 20 billion versus Mastercard's 13 billion. They have more debt. However, the net debt is better for Visa than it is for Mastercard. You can see the numbers there. The risk betas are comparable. They're a bigger company, so they obviously have generated much more net operating cash flow compared to MasterCard, more than 2.5 times. And folks, that's it. I do hope you found this to be informative. In my judgment, I like Visa. I think MasterCard is a good investment, but I think because of some of the debt levels and the PE ratio, I would rank it right behind Visa. Now, that could change because it's a competitive market, but for me, it's Visa. So if you found this to be informative and entertaining, I would ask you to please subscribe to our channel, Dividend Blasters, and share and like our video and share it with a friend or a family member. Till our next video, have a wonderful day and God bless.